This year, some of the main drivers of markets have been better economic growth, not only in the US, but globally. Additionally, it's one of the strongest years in terms of revenue growth for companies. One of the biggest criticisms of the current bull market is there was earnings growth with no revenue growth, and it's because companies were squeezing more and more productivity out of workers. You've finally seen strong revenue growth. On top of that, you've had excessively loose financial market conditions. So the Fed's hiked 3 times since the election, but financial conditions have actually gotten looser, mainly because long-dated interest rates have gone down in the Treasury market. So you combine all those factors, that's led to a much more powerful run in equities and most risk assets than people thought this year. Now, looking forward, we expect that to continue generally, but with much more muted gains and more volatility. So if you look at equity markets, we think 8 to 12%, high single digits, low teens make sense. The economic growth looks at least slightly better next year than this year, not only in the U.S. but overseas. So that should power earnings and revenue growth again. We do expect interest rates to go up, but at a fairly slow pace. And so you put that all together between earnings growth, still accommodative financial conditions, and good economic growth, and it should not be a bad year for equities next year.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Capital Multi-Advisor Hedge Fund Portfolio Series G, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.